Hello friends, we'll be discussing an illustration which will be related to preparation of balance sheet along with more adjustments which will include outstanding expenses and income related to it. Now, when we speak about certain adjustments, this will be not just closing stock valuation, it will be more of outstanding expenses, accrued income, etc. related to it. Now that we know the basic format that is required to prepare the trading account, profit and loss account and the balance sheet as well, considering all these details, we'll use all these things to figure out how exactly we're supposed to pay off all the balances, how exactly we're supposed to go ahead and complete the lectures, or probably when it comes to profitability of any kind of thing, or rather profitability of non-manufacturing entities. Every lecture that you go ahead with this, or every lecture that you go ahead with preparation of trading account, profit and loss account, will be a part of extracting the balance sheet out of all these two items, basis trading account and the profit and loss account. Now, trading account and profit and loss account will be based on the preparation of adjustments as well, because adjustments form an important and a major aspect of preparing both these two items, which helps you in extracting the balance sheet. Now, we'll have one certain illustration just based on that. So, let's start with the preparation of that illustration first. Now, that we've prepared the illustration here, which refers to Mr. Jain, and the closing of these books have been mentioned as 31st of December 2016. Now, on the basis of all these details, we have to go ahead and figure out how to prepare the trading account, profit and loss account and the balance sheet respectively. Let's figure out what exactly do we have in this illustration. We have capital balance as 20,000, debtors as 8,000, creditors at 10,500, purchases have been mentioned at 60,000, sales have been mentioned at 80,000 here, income tax paid is 500, opening stock has been mentioned as 12,000 here. Office salaries together constitutes 6,600. Establishment expenses goes to 4,500. Selling expenses comes down to 2,300 here. Furniture comes to 10,000. Cash at bank expenses goes to 2,400. Miscellaneous receipts at 600 here. And drawing comes to 4,800. All these details have been mentioned. Now there are certain adjustments. Let's read it out. Salaries have been outstanding as of December 2016. They have mentioned. Let us figure out how much is the amount. It's supposed to be 600. That means outstanding salaries is 600. The effect of this will be, first, it will be added to that specific expense. Next is the balance sheet liability side, it will be showed up. Next adjustment refers to depreciation that is supposed to be provided at the rate of 10% on furniture. The expense, or rather the effect of this specific adjustment will be, first, it will be shown on the debit side of profit and loss account. Second, it will be subtracted from the cost of the asset in the balance sheet. The next adjustment refers to providing of interest on capital at the rate of 5%. Now, interest on capital is an expense for us, hence it will be shown in the profit and loss account. The next will be, it will be shown on the liability side as it is a liability for the business. Closing stock has been valued at 14,000. This has been mentioned in the question. The effects of this will be one on the trading account credit side, one on the asset side of the balance sheet. Now that we know all these details, we have to go ahead and figure out how exactly we need to prepare these problems. What is the definition, or rather what exactly do you have to go ahead and figure out when the trading account is prepared, when the profit and loss account is prepared, and how exactly the balance sheet will be extracted on the basis of these two items that we are preparing. Now, extracting the balance sheet doesn't mean necessary that you have to take the amount from that instance, or rather from that profit and loss account, and paste it here. The reason why trading account is prepared is to figure out the gross profit. That will help us to figure out the net profit, and that net profit or net loss is supposed to be added or subtracted into the balance sheet on the capital side. Hence, both these two things are supposed to be prepared. Now, we'll move on to the preparation of trading account first of all. Now, the first thing that we are going to prepare is the preparation of trading account, rather forming the trading account. So let's start with that part. All the items that are supposed to be a part of trading account has been mentioned here. We have mentioned the closing stock, or rather, let's read it out for you what exactly we have mentioned. We have started off with the opening stock first of all. Opening stock has been mentioned at 12,000. The next item that we have taken into consideration while preparing the trading account is the purchases. Net purchase amount has been mentioned here, that is 60,000, as there are no purchase returns or sales returns mentioned in the question. Hence, whatever amount related to the purchase or sales has been mentioned is the net amount. So purchase amount has been mentioned as 60,000. Sales again as defined has been mentioned as 80,000 here. And the last part that we have mentioned here is the closing stock, which is valued at 14,000 as described to us in the adjustments here. Now with all these details, we have figured out that we need to find whether there is a gross profit situation or a gross loss situation. In such a scenario, we need to absolutely go ahead and tally the balance sheet, or rather tally the trial balance here, or rather if we can talk about tally the trading account. So let's find out the interim balance first of all. Now as you can see that on the credit side we have 94,000, on the debit side we have 72,000, which clearly states that credit side is more as compared to the debit side. Hence, in such a scenario, there is a gross profit. Let's figure out how much is the gross profit here. So the gross profit that we have figured out is 22,000, which brings you to equal tally of 94,000 both on the debit side and the credit side. So let's tally this, and post that we'll go ahead and prepare the profit and loss account. Now with this we have completed the trading account. The next part is to complete the profit and loss account. Hence, let's start with the profit and loss account preparation. Now, with this we have mentioned all the items that are supposed to be a part of profit and loss account. Let's read it out for you. The first thing that we have carried forward is the gross profit that we evaluated in the trading account. Hence, we have mentioned it on the credit side here. On the credit side again, we have miscellaneous receipts, which is a part of profit and loss account. Hence, it's been mentioned on the credit side. Now, when it comes to the debit side, all the expenses that are related to office and administrative work, including the selling expenses as well, will be a part of debit side of profit and loss account. So, let's start with the first part. That means all the items that are related to the debit side of profit and loss. First is the office salary, which has been mentioned as 6,600 as given in the trial balance. Also, related to salary, we had outstanding expenses related to it. That was somewhere around 600. Now, as per the adjustment entry, this outstanding should be shown in the profit and loss account added to that expense and on the liability side of the balance sheet. So the first effect given here is addition of outstanding salary to salary account. So 6,600 plus 600 will give you 7,200, which has been mentioned in the outer column. Again, apart from that, we have establishment expenses, which has been mentioned as 4,500. Selling expenses also has been mentioned here, which amounts to 2,300. Now, the next expense refers to depreciation on furniture. Furniture costed around 10,000. On that, we have to give 10% of depreciation. That means 10,000 multiplied by 10% will give you 1,000 as depreciation. This depreciation will be shown in the profit and loss account, and in the balance sheet asset side, this amount will be subtracted from 10,000, which will give you the outer column as 9,000 there. Apart from that, we had the last adjustment, which stated as interest on capital, which is 5%. Capital balance is 20,000. On that, 5% will give you 1,000 again, which is again an expense for the company. Hence, it is mentioned on the debit side of profit and loss account. Now, with this, we have completed all the details of profit and loss account. Let's figure out with the interim balance which side is greater as compared to the opposite side, or rather we can talk about if debit side is greater or credit side is greater, which will help us in evaluating whether we have net loss or net profit. Let's figure it out. Now the interim balance that has been derived shows that the credit side value is 22,600 and the debit side value is 16,000. That means there is a net profit here. Now we have to evaluate how much is the net profit. The difference between that will be the exact amount of net profit. So 22,000 has been mentioned as the final tally of profit and loss account. This net profit that we have figured out will be moved to preparation of balance sheet. So let's start with that. Now, all the necessary items that are supposed to be a part of the balance sheet have been mentioned. Let's start with the liability side of it. The first thing that we have mentioned is the capital balance, 20,000. In that, we have to add the net profit that we have figured out. That is 6,600. And in that, we have to add the interest on capital, which we have figured out to be 1,000. Total comes to 27,600. But from that amount, we have to subtract the drawings first of all, because there were drawings mentioned in the trial balance amounting to 4,800. And the next part that we have to subtract is the income tax that was paid for Gen. 500 was the amount. So the total capital balance that comes on the outer column is 22,300, which has been figured out very easily. Next is the creditors, or rather we can talk about the outstanding office salary, which has been mentioned as 600 rupees. Now this refers to the adjustment that we had mentioned while preparing the profit and loss account. After this comes the creditor balance, which is 10,500. With this we have completed the liability side. Let's go to the asset side. In asset side we have furnitures, which will be net furnitures that we have to mention there. Now the furniture balance has been already mentioned there. 10,000 is the furniture balance, of which we have to subtract the depreciation as explained while preparing the profit and loss account. So the outer column will have a balance of 9,000. Then we have the closing stock, which is 14,000. Debtors at the rate of 8,000. And cash at bank being 2,400. Now with this we have mentioned all the necessary items which are supposed to be a part of this balance sheet. It's time to figure out whether the liability side is equal to the asset side or not. So let's check that out. So 33,400 is the liability side total. This should be the exact total of the asset side as well, for us to feel relieved that the liability is equivalent to asset, which brings you to the closure of this sum. Again, the asset side total comes to 33,400 itself. That means liability side is equivalent to asset side, and hence we conclude that the balance sheet is clear and precise with all the details included in it. So these are the small adjustments that we have to take into consideration while preparing all these details. So make sure there is no error while making the adjustments, or rather while posting the effects of the adjustments, because that's the maximum area where you can commit certain errors and that will cost you the whole problem. So make sure all these small details are taken into consideration, and hence that will help you get a precise balance sheet. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.